Going to do a quick review of today's move. I didn't take any trades today. One, because it's Friday. I don't like trading Fridays. Two, we had NFP news, so I was anticipating some big move around the news release, which wouldn't have been ideal to trade in just due to the volatility. And then at the end of this, I'm just going to do a quick weekly summary for the trades I've taken. And just some main takeaways on the week, from my opinion. So coming into Friday, there's a lot of accumulation. I was ideally anticipating like a further push down. As you can see here, I've readjusted my fib on the weekly. So we're getting into the territory where I'm going to start looking for long entries again, but we're still not quite there. I'd anticipate that we maybe have either a retracement up going into next week and then continuation down towards the second half of the week, or we just push straight down at the start and then we see the move up. For reference, that highlighted yellow bit is, I've referenced this fair value gap here is inverse fair value gap in my previous recordings. So that is my main point of interest on the higher time frame, where my bias will eventually start to look more bullish. But until then, you can see, the markets have just sort of gone into more of a correction. I think it's 10% down in a small amount of period where it's officially classed as a market correction. So I know that we've gone past that threshold in even today or in the recent days. So it's nothing to worry about. It's just going to keep going down until we get to this zone where we can then start targeting more higher targets. So going down into the 15-minute chart, you can see here, got this big spike candle where the news has come out, and even on like the 1 minute candles, 1 minute chart, sorry. Yeah, you can see this. So that's like I think it was something like a 468 pip move or something like that. Let's have a look. Yeah, so that 1 minute candle, you're looking at 468.6 pips, which is ridiculous for 1 minute. 1 minute. So that was at 8:30, and then following that, I had marked out the data highs as a potential target. Ideally, I would have liked to see it on this as adding to a position, but this was more just testing. I didn't take either of these. I was just sort of tape reading today just to see my strategy, see if there is something in this like scalp setup that I have been seeing in the last couple of days. And when we're in a market maker sell model, is this something that is going to repeat quite often? And is it quite a short trade that I can take during my working hours? I have to trade just post my lunchtime. So small trades are ideal for me with good risk to reward. Just because of the time, I have limited time looking at charts when I'm at work. So we have the 9:30 open on this. Is it this candle here? Yeah, this bullish candle here. You can see markets went straight up. And then we do also have this 1 minute order block. The order block comes from these 3 up candles here. And then price has literally traded back into it, tapped it, and then bounced at market open, which is a good sign. We also have SMT here. You can see we made a higher low off a list order block compared to a NASDAQ, which is a bit more flat, like it's pretty much at the bottom of the candle. So I was feeling more bullish on this for my bias on the trade. Now, this is something interesting for me today, where I've sort of learned a bit more on the inverse fair value gaps as like an entry. like a confluence for entry. See, usually I would be looking at, right, if there's a fair value gap here that forms and a breaker block, then not a breaker block, sorry, and an order block, then I would look to have entered here. Ideally, you would want to see a breaker structure a bit cleaner around here as well. So basically what's happened up here, you would expect that to happen here, trade back down into a fair value gap, and then enter off that to push. So today, instead of that, what we saw was we traded back to this order block, and then we had a few candles in which, you know, because there wasn't a fair value gap, it's a bit more uncertain. So I was just watching to see what actually played out here. And we did eventually break structure on this, which is where this bullish candle closes above this high. It also just closed above this high here before we pushed back down. Now, as we didn't get a fair value gap in here, price displaced, came down. And, you know, I was kind of looking at this. I was like, right, this isn't really a trade that I could take at the moment. Yeah, we did trade back down into this imbalance, but, you know, it's not enough for me to get in. And then the next minute we see this fair value gap inverses. And then at this point, we see push down back into the inverse and then the push up. So that I now know for future reference can possibly be used as an entry model when looking at this setup, which is quite handy to know. My targets were, you know, this high here for break even. I would have moved my stop to break even, and then I would have targeted this high for the trade with my stop just below this low candle here for bang on 2-to-1 risk to reward. So if I was to get in that trade, that would have been what, 9.39 to take profit at 9.44. So that's literally 5 minutes for how much would that have been if I'd just done, say, half risk, I think, for NFP. So if I was to do, let's have a look. Yeah, so 1% risk on that, you know, 33 quid stop, £67 TP. You wanted to do, say, less risk because it's news day, you know, 25 quid for 50 quid. That's pretty nice risk to reward. I would be happy with that for the day. So no complaints there. We know for next time that even small little moves like this, if they've got a good risk to reward, then they can still make a nice bit of money for the week. So following this, once we saw this, I continued to watch price, and then we'll go out into the 5 minute just for a bit more reference. So yeah, you can see on the 5 minute chart we broke structure here, retrace, push up. And then with these data highs still in mind, I would have liked to have seen price push all the way up here, take this, and then possibly start a move down. But we didn't see that happen, so that's absolutely fine. We would have been done for the day anyway. So following that, price then does trade back down into this fair value gap on the 1 minute that is created from that initial move. So that would have ideally, I was anticipating maybe we would continue the move upwards, and this fair value gap would have been, you know, the fair value gap that I would have been looking for here. This move would have been like a continuation to the previous position, same risk reward, except we would be targeting the data highs just to see the continuation of the move towards, you know, 11 o'clock. But bear in mind, this has just gone bang on, well, pretty much just past 10 o'clock, bang on 10, where that reverse is there. Break even at this high, and then yeah, I would have moved stop up here and then just let it run. I didn't take this just because I'm just building confidence in adding to positions at the moment, just to try and get the most out of my winners. But yeah, it was interesting to watch this play out. So we would have been stopped out at 10:31 if we were in this trade, which I think I probably would have done even lower risk on this just because I'm adding to an order. So I would have done like one unit, being 0.37% risk. As you can see here, 30 quid for 15 quid. It's not even really worth risking that because you're just pushing potential loss or just eating into your profits already made for the day. So I think at this point I need to collect a bit more data on this sort of stuff just so I can be more confident when executing it in real time. But yeah, from there prices just continue down to take these lows formed with the SMT. Like, I mean, you could kind of like, there's just not really a sell set up there that matches my model other than maybe like, you know, breaker structure here, like here, around here, and then we retrace back up into the fair value gap, and then you would then target, for example, on this retrace, put your stop above this high, and then target these lows here, which isn't even that great risk to reward. 1.5, like, it's okay, but you know, it's kind of late into the session. Like, you see, like 10:30ish. I'm not really looking for positions around there unless it's like absolutely clear to me at the time, and my bias was already bullish for this session. So yeah, it's one of those. It's just interesting to keep note of that and learn moving forward. I think on the higher time frame as well, it definitely does make sense. Like, if we look at the Fibonacci here, the 0.62 mark is notoriously like a retracement mark, and we have pushed down to that and pretty much come straight back up from it. Or we are now going into PM session. But yeah, that's like my main takeaways from today is just stick with the smaller moves that I'm confident with. Lowest hanging fruit, like, you know, break even there, no risk now, take that, or take this even across, and then, you know, that's boom, £50 in 5 minutes. So that would have just been a nice trade to end out the week. But nonetheless, we keep moving. We're gonna watch charts going into next week, and overall for this week, I'm up. I think it's 152 pips or 154 pips, with a profit of about £70, I think. So it's a good start to the month. I'm happy with that. We can go on to the hourly here. So yeah, just analyze how the weekly candle would have played out. Yeah, so it's a bearish week. You can see. Let me just get the old. Here we go. Yeah, bearish week. So we come in, accumulate, push up, come down, retrace, accumulate a bit, you know, come up again, sweep them highs, fill in. I'll take this liquidity here, and then a further push down Friday, you know, and then a final push down. I wouldn't be surprised if we see this come up and then just a little bit of this. When you straighten that out, it looks a bit more like an actual candle. Not the best representation there, but for my understanding, that does make sense as a weekly candle. You want to see the wick coming up at the top, the body of the candle around here where most of the action happens, and then this, I assume, will become at the wick of the candle, and then we'll just see some sideways movement coming into the market close. So yeah, overall very happy with this week. I know I've been slacking on my journaling recently, so it's nice to actually get back into the swing of it. And yeah, enjoy your weekend. I'm off.